So since the inception of my investing portfolio, I have had the Vanguard S&P 500 index fund from Vanguard, which has the ticker number VOO. And I'm actually going to be getting rid of it and then going into a different type of ETF, and I'm going to explain to you why here today. But if you are new here, my name is Dennis, and I like sharing with you guys my investing journey here on this channel. So let's kind of go into my portfolio, take a look at what I'm buying into, and let's kind of go ahead and jump into my portfolio. So in case you haven't been following me, I have my investing portfolio here where I am trying to invest to have dividends down the road. And if you're interested in what I'm using, this is M1 Finance. I'll have a link in the show notes down below. You can check out that link. Help support out the channel if you would like to do so. Now, I'm going to scroll down over here towards the bottom. It's going to be kind of cut off a little bit here. But I am going and removing my Vanguard S&P 500 fund, like I mentioned, ticker number VOO. And I am actually buying into a different Vanguard ETF, which is called Vanguard S&P 500 Growth ETF. And that one has a ticker number of VOOG. The cool thing is with M1 Finance, I'm just selling out of this and buying into this. Super easy to do. But you might be asking me, like, why are you doing this? You know, what's the difference between these two funds? Is there, you know, a big difference? Well, not really in the, like, small scope of things, as far as everything that is in VOOG is technically also in VOO as far as the funds, but essentially it's condensed down to about half of those funds that are in the S&P 500 to the ones that are having some of the most growth over time. And so what I'm going to do is go on to seekingalpha.com. It's a website that I love to use to kind of get a lot of my information here. So we're going to bring up Vanguard S&P 500 and the S&P 500 Growth Fund. So we're going to kind of do some comparisons here so you can kind of get an idea of what I've been seeing and what I think is potentially a better opportunity for my money long term. So this is going to be the S&P 500 VOO. You can see here that the price point is $322.15. If you are into M1 Finance or other brokerages that do offer fractional shares, the stock price is honestly not the big focal point when it comes to deciding which, you know, ETF or even stocks for that matter you want to go with. You want to look at performance, you want to look at books, you want to look at a lot of different things that are going on. Obviously, ETFs are a little bit different in what you're looking for. But here's a great example. So in the 1 year right now, this has had a growth of 21.45%. And then if I go click on the 5 year, we're sitting at 76.31% growth. You can see that kind of right there. And then I'm going to go to the 10 year just to kind of give you guys even more. Oh, the 10 year doesn't even give me the percentage, but you can kind of see it from where it was to where it is. Huge, huge growth over time. Now, let's go ahead and go to the VOOG. And you can see right over here that the 1 year, even with the downturn in the market, has gotten a gain of 36.87%. And then if we go to the 5 year, we can see here 118.35%. And of course, the 10 year won't give us the percentage like it did with the other one as well, but you can see that growth going all the way over here. So, you know, why am I making this decision of going from VOO to VOOG? A lot of it has to do with the fact that I just want my money to work harder for me. And if the, you know, top half of the S&P 500 is gaining a majority of that growth, that's kind of where I want my money to be. Now, there is a downside to this as well, too. So, you know, there's obviously a lot more growth, but because it's having to be managed a little bit more, there are going to be higher expenses. Now, also real quick, before we continue on, of course, this channel is always having free content for you, but if you want to support the channel, I'm going to have a link down below for anyone that has student loans to refinance. That down there will actually give you a $200 boost if you do end up refinancing your loans and hopefully lower that interest that you might be paying, which can also go back into investing more into the market, which is awesome, or pay off debt or anything else you need. But with that being said, let's go ahead and hop back in to the rest of this content. Now, one thing when it comes to expense ratios is there are like tipping points as far as, you know, how much you're paying in expenses versus how much you're getting in a return. So with the Vanguard S&P 500 Growth, the VOOG, the expense ratio is 0.10%, which is actually pretty high, especially when you compare it to the S&P 500 fund. The regular one over here, that one only has 0.3. So you're going to be paying quite a bit more in expenses, but because of the amount of growth that you're getting, it's definitely going to outweigh the expenses that come along with it. Now, if you're not familiar with how expenses work on ETFs, fear not. You're not actually paying anything out of pocket. It is always coming in from the back end of the actual fund. So you don't really kind of feel those expenses coming at you every single month or quarter or every single year. It's just taken out on the back end for you. But again, because you're paying more in expenses, hopefully your returns are getting higher, which is, what the VOOG fund seems to be doing for, the people who are invested in them, which is why I'm interested in switching over from VOO to VOOG, because my money is going to be working further for me, which means I can, pay a little bit more in expenses with the expectations that I'm going to be earning more. Now, of course, all of this is just, history. That doesn't actually dictate what's going to happen in the market. Things can go down. It's not always a guarantee that VOOG is going to do better than VOO, but just historically, it looks like that's always been the case, and that's where I'm going to be moving my money, just to kind of, hopefully get some more of those gains, so that way I can later down the road have more money to be able to work with when I want to use it. So with that being said, if I go back into my M1 Finance portfolio right over here and I go into my upcoming trades and look at those details, like I mentioned, I'm going to be selling off this Vanguard fund right over here, and then it's going to be buying into the new one relatively close to this original amount, and then a little bit more because I am doing a regular purchase that same day. So this goes in effect the next day for me as of this recording, and then I will be now into the VOO fund, and hopefully I'll see additional growth that maybe I would have missed out on, which I did miss out on from having just the VOO fund. Now, if you want to keep on watching more investing content here on the channel, check out my next video right over here, and don't forget to subscribe. My name is Dennis, and I will see you in that next video.